Good morning. It's Tuesday, June 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So tomorrow afternoon, I'll return to the Chicago office. If you do need to place an order, please reach out to the team or the trade desk as they're always available to assist you. Now, it seems that risk appetite is back on with stock futures rising solidly. Interestingly enough, this year, every period of panic by investors has been met with buying activity. And this even includes the tariffs. Now, that was the only one that I had concern about, but we dialed in on Trump's tactics. We learned his negotiation skills. We identified when Scott Bessent was returning on television or giving out a statement, it was often the cool heads that prevailed, and we were able to overcome. Then there was the Sell America trade, the Moody's downgrade, the DeepSeek situation where it hit the NVIDIA stock. The Moody's downgrade was on a Friday. You had conflicts involving Donald Trump and Elon Musk, and then finally you've got the unrest in the Middle East. Now, looking at previous strategies and geopolitical risk events that have caused some short-term volatility in the equity markets. However, the S&P 500 on average has increased about 9% within 12 months of such events. Now, remember, past performance is not indicative of future results. Now, WTI crude oil futures have partially recovered from an earlier decline, but are still down about 10% on the week, currently trading right around $66.55. The low was $64.34, and it's down about 2.86%. Now, remember, if the economy starts to pick up, we could continue to see inflows into the oil market as that demand will start to strengthen again. So prices are now right-sizing themselves for the current situation. Now, looking at, unless there is a Middle East escalation, I think that the focus is now going to shift back to the Federal Reserve, where 6 speakers are scheduled to speak today, including Chairman Jerome Powell. Now, is the Middle East conflict over? I doubt it. There's still 900 pounds of highly enriched uranium that needs to be located and dealt with. So I anticipate that that will quietly be working in the shadows, where a new nuclear arrangement would be taking place. Now, checking on the S&P 500, S&P up about 0.75% at 6124. That's up 46 3/4 points. The high of the overnight session was 6143.75. The low was 6075. Now, I gave you the levels to watch yesterday, which was to keep an eye on 59.59. That was the overnight lows from yesterday, where a break below that could retest the 5900 level. That didn't happen. Or a move above 6100, which we saw in the overnight session, potentially targeting a risk on trade up to 6150, where we came very close to that session in the overnight action. Now, where is the action at in the metals markets, where you guys care the most about? Well, you do have copper futures up 1.39%. That's up 6.75 cents, trading at 491.70. Many traders that I've been working with closely have been active buyers of significant dips in the copper markets, targeting into the 490s and even the $5 range. Now, a copper market squeeze is currently underway in the London Metals Exchange, driven by rapidly declining inventories, which are causing spot prices to rise. The available inventories on the LME has fallen approximately 80% this year and are about 1 day's worth of global consumption, indicating a serious supply shortage. The LME has implemented measures to prevent backwardation, but trading data has revealed that a significant squeeze is taking place in the copper market, with backwardations known on key contracts extending through June of 2026. So the copper market is where the action's at. If you could get some kind of recovery in the gold market, we could see another movement into the silver market. That's why I would be leaning slightly to the upside here on the silver market. And it would not surprise me, and this is not investment advice, that if we could see a recovery in the gold market, we could see potentially a 20, 30, 40% increase in that silver market. So we're going to want to keep an eye on that. Keep an eye on some of the dynamics. You do have the or the dollar index slightly lower. You also have treasury yields just a bit higher here, but nothing to be alarmed about. Again, the risk on sentiment in the U.S. equity markets is driving some of the flows into there. And then also Bitcoin, a lot of active buyers here that I've been working with closely below that 100,000 mark, stepping in, and now prices up to about 105,000. My long-term case, I do believe that Bitcoin futures over the next 2 years could hit 200. 200,000. I also believe that the British pound could see 150, 160, and even 170. Some other calls that we've had here have been $40 on silver by year end. We also have gold up at $3,700. So we'll have to see, because the geopolitical tensions involved in the gold market and the escalation in the Middle East played some kind of role in there, that we might have to reassess those numbers and bring them down just here a touch. Now, where could the money go here? Because of the action that's taking place in the copper market and the disinterest in the gold market, well, it's the silver market, because money managers have increased their bullish bets by about 1,241 net long positions to 50,034. That shows on the weekly CFTC data, which was delayed, and I generally review on Friday and Mondays. So the futures and options, they show that this net long position is the most bullish in 5 years. The long only position rose to 3,284 to 63,591, and that's for the ending week of June 17th. So the long only total was the highest in more than 3 years. Now you look at the gold market, well, gold fell as safe haven demand. It kind of flowed out as U.S. President Donald Trump announced that Israel and Iran had agreed to a ceasefire. So the bullion fell as much as 1.6%. It tested that 33.20 mark, and then while we're bouncing back here at about 33.40, and I'm sorry, it was 33.30 is about what it tested on the August futures before bouncing up to 33.40. So in addition to the geopolitical factors, remember there's concerns about the economic impact on Trump's tariff, the ongoing purchases by central bank, which will play a strong role in the performance of the price over the back half of the year. And then investors are going to be closely watching Jerome Powell here in the upcoming testimony. It seems like things are made where most likely Jerome Powell is going to be out, and some new candidate will come in, which will be slightly politically driven, will want to appease Trump specifically for the role, and we'll start to see a series of interest cuts take place. Now, when you get the terminal rate completely mapped out, that's when gold futures will question how much higher they can go based on that driving factor in the market, let alone you still have all the other factors out there. So basically what you'll want to do is you look at any one of these commodities almost like a team, like a basketball team or a baseball team, and you say you got your offense, your defense, your coaching, your mental skills, all your player positioning, you know, their individual skills are hitting and everything else. Well, you're starting to take away some of these. When you take Middle East out, your team gets a little bit weaker. You take out the number of cuts, your team gets a little bit weaker. You take out batting, you take out pinch hitting, stuff like that. So that's where you have to adjust your pricing and things like that. I see a lot of investors that are just specifically so one-sided on silver is going to hit 50 and this and that they tend to forget that there's certain elements of these different commodities that need to be taking in place, where you need to have all the horses running together seamlessly in order for these things to hit their objectives. So with silver, for instance, you need to see a robust Chinese economy. You need to see solar demand. You need to see a risk on environment and markets. It's just a number of different things that are going. It tends to work better when you have gold going up and you also have copper going up. Silver tends to benefit there. You also want to see the short players caught off guard in these markets. That's why I always say that every bull market is created out of a bear market squeeze or a short covering rally. So we just want to pay attention to some of these driving factors in these markets before we come out with these assumptions that the markets are going to hit X, Y, or Z price target. Now, looking at the ETF flows, you do have exchange-traded funds. They added 55,000 troy ounces of gold holdings in the previous session, and that was most likely people that put the positions on in disbelief that any kind of agreement would be made, or that they probably felt that this was still an escalating situation rather than a de-escalating. So we'll want to see, because this has been about 8 straight days of growth in the gold market, the longest winning streak since April 21st. And the ETF rose by about 8.6%. You look at silver, up about 6.7%. They did cut about 525,000 troy ounces of silver holdings for the previous session. Perhaps it was a rotation into, like I said, Bitcoin, into some of the equities, into the copper market. You never know where it goes. Platinum's unchanged. However, although if you do look at platinum futures, they're up about $20. They were up about $30 early on. Gold silver ratio dropping down to about 92.5 to 1. So that's coming off just a bit here. Some of the agricultural markets been out of favor. You had wheat futures sell off here with the de-escalation of the conflict. You also have corn futures continuing to make a lower low on the chart. Soybean futures just a little bit softer here. Cattle coming off. That's one that a lot of traders that I've been working with have playing the downside of that market, and of course the upside on the U.S. equities and the buy the dip mentality on the Bitcoin and crypto markets. So you guys got any questions, reach out to me. I'll only be unavailable for a couple hours. The flight that I'm taking, because it's kind of wonky, some of the airlines down here, they don't necessarily have all the Wi-Fi and everything else, or the Wi-Fi is unreliable for a certain duration of the flight. So if you guys got any questions, you need anything, this is tomorrow. I like to give people a heads up, is to reach out to the trade desk over in Chicago. But remember, futures option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.